www.tradecaptain.com. But as you can see, the website is up and the team has been producing updates, so look forward to more updates over the next hour, as we have quite a backlog of articles we need to upload. What we're going to do now, we're going to take a look at the main markets. Of course, we're going to talk about the pound versus the USD, having a very bad day today, down with about 0.8% to 0.77 right now. Reason for that is because the economic data, GDP growth for the first quarter was softer than expected. So we're going to talk about that. Before we start though, as always, I need to stress that trading financial markets unfortunately is risky, and there's a genuine risk that we'll lose all of our invested money. Click here down for risk disclosure for more on that. And as well, if you're new to this, or you're watching this on Periscope or on Twitter, then this is a live update we host Monday to Friday here at the live trading room, usually at 9 a.m. As well, for today we have a webinar at 3 p.m. London time. It's going to be about short-term scalping. I'm going to introduce you guys to a short-term scalping strategy that I've been using for a few years now. Okay, let's get going. And yeah, we'll continue with the pound, right? So the dollar obviously had big gains over the last few days. Dollar index breached some long-term levels. So the dollar was already on a tear, and now you have the pound as well weakening because of those soft GDP numbers. So this is just the dollar index. You know, this is from April 17th. Now 10 days later, we're at 91.86. So the market is up with about 3%. And that, as you know, if you look at New Zealand dollar, you look at Euro dollar, you look at all these different markets, you have in general just a very, very bullish dollar, and today you have an even weaker pound as well because of those numbers. You look at pound CAD, pound Aussie, see some weakness across the board. Now this market, you know, the numbers were bad, okay? So the market never corrected the pound dollar as I wanted to. So here, there's not too much to do about it. You know, we missed out on that. But if one is looking to get involved, I think we can now, because we have these double tops here safely, or not safely because nothing is safe, otherwise we wouldn't be using those risk disclaimers, but we could probably argue that, you know, as long as trade below 140.46, this market is going to be capped. And here, you know, we already declined quite a bit. Yes, in the long run, you know, with the dollar gaining and with these numbers coming out, Mark Carney being dovish, then maybe the pound dollar, especially on the daily, you know, if we take out this low here at 137.07, maybe the market is gonna create a major double top, and the market could potentially just continue to move substantially lower, right? So we're gonna work with that. However, though, if you sell right now, you know, you're gonna have a risk of 237 pip, and then yes, I think it's gonna go down. You know, maybe it'll go down with, you know, 83 pip, but it's sort of not a good risk reward ratio here to make just say 100 pip and risking 229. It's only if you strongly believe the market is going to tumble lower, which again I have, but again the risk reward ratio is not that good anyway. This is forex at the end of the day. Now this market could be trading up here at 144 if something bad happens. Maybe something happens, you know, North Korea, or you know, something with the treasury markets, you know, yields going up in the US. You know, they're going up because somebody's selling treasuries as well. You know, it's not just because everybody's super excited about the deficit in the US. So a lot of things can happen. So what is sort of a better strategy trading this? Well, I think a better strategy is, you know, you take a fib. So these are the actual levels, 140. We don't want to see price trade above 140. However, though, one should never really be standing too close to all the action. So that's why I have 140.46. But this is the actual level I'm watching, or that's the actual key point for the market. So taking a fib from that low, from the high to this low gives you these three levels, and most likely, you know, we'll have a bit of a pullback, maybe 138.75, and then maybe from these levels I would assume that this market could potentially do something like that. So it's oversold, Risk-reward ratios are not good, and I want to see a bit of a bounce. If I load the RSI 14, you can see exactly. I mean, it was oversold down here, so it's more oversold today. Doesn't mean that it needs to bounce. It just means that this is not a good entry to sell. So bearish, and that's it. Now if you look at the actual numbers, you can see that the year-on-year growth is actually pretty much as anticipated, and here the quarterly is a little bit better, but index of services, which is another number out here today, and I think, let me see here, I'm a bit confused now when I'm looking at this right now. If you look here at the ONS from they provide statistics here. So GDP growth in the first quarter down from 0.4 to 0.1, and this is really the slowest Q4 since 2012. Slowest since fourth quarter of 2012. So it looks like my little economic calendar here is sort of showing something different. If you look at the ONS, which actually compiles the report, they talk about first quarter GDP 0.1 down from 0.4, and again slowest since fourth quarter 2012. See if they have any charts on it as well. That was pretty much it. So weak numbers in general, sell-off in the market, very straightforward. Okay, Euro had a big sell-off yesterday, and here the idea was, you could sell on the break to the downside, and I think with this break here, this market will probably continue to go down to 119.20, and there are different ways of working with this, but obviously because of the slide in the pound, this is also moving down. We're seeing general dollar strength. This is a 4-hour chart. By the way it looks right now, you will continue to trade lower. I think it could hit something like 20.50, maybe it'll hit 120 already today. The thing here though, if you're not short on that breakout, again, you're not really working with a good risk-reward ratio. I'm happy to be bearish below 122.50, which is the same level I talked with you guys yesterday, and I think here, it's a bit tricky. I think this could go lower. I think this could eventually go down to 117.15, so one could potentially sell. Stop on the other side, risk 185 pip. Goes here 136, so it's a 1-to-1, and then maybe all the way down to 337. However, though, I wouldn't be trading this right now here. I would wait for a little pullback. If we just pull a fib from the current high to the current low, at least up to 121.30, that gives you a risk of 119 versus a potential reward of 200. So that's much better. Here's Bitcoin. Bitcoin is doing all right actually. So you might remember I said break to this high should take you up to 10,400. I think pretty much from 10,400 all the way up to 11,718, which are these double tops here from March. I think traders are going to book profits. Now we saw a bit of a tumble already a few days ago, down, but as long as you're trading above this low, I want it to remain bullish, okay? The market swing to the upside is looking all right now, and obviously and clearly if we trade below here, then we take out this double bottom, and that will be difficult to deal with. So on a break to the downside like that, bearish, okay? Until that happens, you just want to go with the flow. Ideally one would have bought already yesterday, or if you're long from the breakout here from a few days ago, just long, really bullish about this level. Crude oil is doing all right, down, up. So we got this section right, and then so far okay. The market though, I think, is starting to lose a bit of momentum, And if we trade below 66.93, I think we could probably go this low, so down and then up and most likely lower. As I've been saying over the last few days, I think it's trying to create a high like this one here. Till that happens though, it's totally fine to go with the flow. You will be surprised how strong some trends are. Sometimes they just continue forever and ever. Look at the pound dollar today, or look at New Zealand dollar USD. Here's gold. Now with the pound bearish, the euro bearish, Aussie dollar bearish, New Zealand dollar bearish, dollar CAD sort of short-term bullish, long-term sideways, I think it's gonna be a bit difficult for the price of gold to bottom out around these levels. But obviously in the short term you have stretch markets across all those, like euro and the pound and all of that, so you might be able, you know, when and if those markets bottom out, I think this market could bottom out. And there's two ways of trading this. Either one just goes with the trend, well, the big picture, and says like, okay, I'm gonna risk 1%, 1.13, and I'm just gonna hold this for a week or 2 or 3 weeks, whatever time it takes to go up to the upside. So you risk about 1% to make 2.5. That's an okay residual ratio. Again, you have that residual ratio because you have a sideways market here as well. Now the alternative is you say, alright, all the other markets are under pressure, maybe this will continue to soften, and you want to look for something that like an end of this short-term downtrend, and that level is 1326. Why? Because prices are creating lower and lower highs. Take out the high, we end the short-term downtrend, and that could give you a bit of a bounce. And then again, these other markets, you don't know exactly what's going to happen. This could rally because of other factors that are not related to the dollar. Here is the German DAX. German DAX is up, and obviously is this up most likely because of the euro softening. With the euro being strong, the DAX Spanish stock market have been underperforming the same way as the FTSE 100 has been underperforming because of the pound has been strong. But with things now turning, it wouldn't surprise me if the German DAX actually continues to outperform against the US stock markets. In fact, let's take a look at that ratio. So here's a ratio between the DAX and the S&P 500, and it's a daily chart. So this is data from 2012. So you can see here that just recently the S&P was underperforming. We went all the way down, and now the DAX is outperforming, and we're probably gonna go all the way up to the midpoint, which is a ratio of 4.47. So you get 4.47 DAX contracts for one contract of the S&P, and we're right now just at 4.72. So actually this is all wrong, of course. It's 5.12. It's the midpoint of this whole range, that's what it is. So 5.12 is the mid-range. And again, in relation to the actual DAX itself, like things to trade, you could potentially work with a breakout to the high, the weekly high, unless one is already long from down here. As long as you're above 12,255, I'm going to be bullish. And that's it. So we just covered the main markets. If you have any questions, let me see here if I can answer. So Ricardo D says, hi AC, do you expect the euro dollar to recover? I trade technically, but have noticed that after the last 3 Draghi speeches, the euro sinks for a few days and then recovers. Draghi does not hide what he wants. That does not hide that he wants lower euro. I appreciate your view. So there are some macro fundamental reasons, and it's gonna be part of an update. Hopefully I can share that with you guys today. But in the long run, and sometimes it can take a year, 2 years, in the long run, when a country is raising interest rates, and when interest rates are rising faster in one country versus another one, then you tend to have that currency strengthening. And there's different ways. People look at treasury bond yields. Some other people look at swap rates. The swap rate is sort of where the bank borrows money. Now, if you look at the difference between the EU and US swap yields, then you get this green line, and the blue line is the euro dollar. So you can see here that they have a nice, relatively good connection, and this connection totally breached in mid 2017. At that point, the Fed resumed increasing interest rates, and the US economy has been doing really good as well, so swap rates have been moving up higher because of that as well. At the same time, you have the European Central Bank that have not necessarily, well, they reduce quantitative easing, but they haven't raised interest rates. So you can see here that the effect on the swap rate in between these two countries, or Euro area and US, has gone to the downside, to the favor of the dollar. In fact, when you trade, you pay rollover, right? So you, depending if you're long or short, you're gonna pay a financing cost. This is those usually worked on the back of 3-month LIBOR. That's what most brokers use. But 3-month LIBOR and these rates are very similar. So you get paid more to be long the dollar, and if you try to short the dollar, you have to pay instead of receiving. Okay, so from this perspective, eventually I do think the euro should probably be trading closer to maybe 110, unless of course the Fed would need to unwound all the rate hikes. But for now, that's not happening. And we have that technical move. So we have all these macro fundamental analysts that have been telling you to sell the euro since 2017, and then now maybe it looks like they are about to be right. So technically, again with the euro, I want to remain bearish. I don't think it's necessarily going to recover in a major way. I do think we're going to go to 119, and technically with that chart I just showed you, we could potentially go even lower. Now, I'm happy to hold that position and hold that view as long as you trade below 122.50. If you trade above it, maybe the trend would have ended, a short-term uptrend, a downtrend, sorry, and it can turn worse. So, might bounce a bit, but I think she's gonna sell. I think they're gonna target 119, and then maybe 117, 40 or 15, and then we'll take it from there. But if that chart I just showed you, if that actually plays out, then we'll be trading much lower. This report, I'm hope to upload it in the next, maybe today, if not tomorrow, Monday, sorry. It's gonna be under quarterly reports. We're gonna change that name though to special reports or special updates, but it should be up here. It's free to download them. You just need to sign up. It looks like this, the actual section. It's not too complicated. You just need to become a member of Trade Captain. Oh, sorry. Read more. This one is very popular. It's geopolitical elections, things like that. The whole website is running really slowly, as you know today, but you click on read more. It's going to ask you if you're a member. If you're a member, you just sign in. If you're not a member, you just register. It's free to register and free to download these updates. Okay guys, thanks so much for watching. Join me here same time, Monday to Friday, and I'll see you guys on most likely Monday. Cheers, Ricardo. Have a good day, and everybody else watching, and everybody else watching the recording as well. Don't forget we have a webinar today at 3 p.m. London time, education webinars. As well, if you're watching this on YouTube, click on it and smash that like button. This little like button here. Click on it, please, if you like it. Like that. Just need to be signed in. Cheers. Have a good day. Bye-bye.